Welcome to the Kinvestor Report. I'm Arlen Hansen. This is where we sit down to discuss the latest developments in the Canadian small cap sector. Standard disclaimer, no part of this interview shall be construed as investment advice. And as I don't know what stocks we're talking about today, Kin may own shares or be compensated by the companies that we discuss in today's interview. If you like what you hear, be sure to join our network, subscribe to our channel, comment on the videos below, and share them with like-minded investors. Today, I'm joined by Chris Berry, president of House Mountain Partners. Chris has been an independent analyst in the battery metal space for over 13 years. He's got a very large roster of global clients, including investors, mining companies, EV manufacturers across 6 continents. Super knowledgeable, but aside from traditional supply, demand, and pricing analysis, his recent work is focused on battery recycling, alternative extraction technologies, and how battery metals will play an increasingly strategic role in geopolitical and supply chain realignment. Today, we're going to dive into the battery metal space, of course, and discuss some names in the market he thinks investors should be looking at as part of a battery metal portfolio. Chris, honored to have you on the show today. How you doing?
I'm doing well. It's great to be here. Thanks for the opportunity.
Awesome. Really appreciate you being here today. Of course, we're going to dive into battery metals. And I remember he was one of the original gangsters in the battery metal space, 13, 14 years ago. And it's an honor to catch up here. I just really want to give our audience a little bit more background on you and your experience in the industry, just a quick overview.
Sure. So I have been involved in what I would call just broadly the lithium ion battery supply chain for about the last 13 years of my career. Previous to that, I spent about the first 20 years of my career in New York, actually, different financial roles. And then in 2010, had one of those midlife crisis. I hope it's not midlife because I was only about 35, but just had this, idea that, gosh, I'm really interested in geopolitics and technology and commodities and commodity demand in particular. And I just remember looking around back in 2010, we were still kind of trying to put our head above water after the financial crisis and figure out a way forward. But I just remember thinking about this interesting confluence of these factors and saying, gosh, Goldman Sachs, any bulge bracket bank, like they didn't have a lithium analyst back then. Mm-hmm. Maybe they did, maybe it was their chemical analyst and he covered lithium on the side. But, it's not like it is today where everyone's got this whole supply chain under a microscope. And so I just put this, idea of a business together to really be an advisor and a researcher working on behalf of investors, could be private equity, could be hedge funds, around supply chain issues. And with respect to those supply chain issues, really focusing on 2 areas, what I would call the extreme upstream and the extreme downstream. And, those are pretty self-explanatory. Extreme upstream, of course, if we are going to electrify transportation or any portion of the economy for that matter, where is all of this lithium going to come from? The nickel, the cobalt, the copper. So the raw materials, right? Just straight supply and demand kind of dynamics, if you will. And then with respect to downstream, really started about 5 or 6 years ago looking closely at battery recycling. And I was on the board for 2 years, 2017 to 2019, of Li-Cycle, which is now publicly traded on New York, but great, Canadian company. And so I was on their board for a couple of years and I've learned a tremendous amount about that whole sort of ecosystem. And really tried to leverage all of the knowledge that I've seen across 6 continents in the last 13 years to help investors with issues around supply chain, sort of uncertainty and where to play, for lack of a better phrase, and also help companies themselves as they rethink and reposition their business models.
Yeah. Well, I got a million questions about the battery metal space. I think we're going to focus on the market right now. I think it's pretty topical right now. It seems like there's a little sizzle out of the market. Can you, and not surprisingly that it's all coincided with the lithium spot exchange market opening. So what do you think is going on in that regards? And do you think that we're going to see the same game in the uranium, where there's going to be a big discrepancy between spot pricing and contract pricing moving forward? And how much transparency are we going to get in that market?
I think in general, there is a discrepancy today between lithium spot pricing and lithium contract pricing. I've maintained for a long time that there is no single lithium price. And I'm not just talking about the price of carbonate versus the price of hydroxide or butyl lithium or what have you, which certainly plays a factor into it. But The spot price is a number, and it is a number at a specific point in time. Really, of course, focuses on what's happening in China. I would be wary of making any sort of decisions or takeaways just based on that one specific number. I paid a lot more attention to quarterly earnings calls and just market chatter around contract pricing and the direction of that. Of course, I think you could maybe make the argument that the spot price is in some ways maybe a leading indicator of the trajectory of pricing.
Mhm.
And of course, look, I remember during Tesla's battery day in late 2020, spot price for lithium carbonate in China was around $6,500 a ton, give or take. Of course, exploded to $88,000 a ton.
Yep.
Went back down to about 22, went up to 45, and today it's $28,000 a ton. So you just keep an eye on it, because I would argue, despite the noise and the volatility, it does give you a reasonable view on the trajectory of contract pricing, because ultimately those contracts will roll and reset based on what's going on in the market at that given point in time. So I haven't seen, go ahead.
Sorry to interrupt, but is there any volume being traded on the spot market?
It's de minimis relative
Right.
to the overall market, again, which is one of the other reasons why I don't think you want to put a huge amount of faith in that number.
Mhm.
The contracts are where the action is, and that's why you want to pay particular
100%.
attention to the SQMs and the Albemarles of the world, and what they're saying with respect to their views on contracts and pricing.
Right. And so we can get that contract pricing. I think we get that through fastmarkets.com or Benchmark Minerals Intelligence. It's not real time, but they do their best to get that industry knowledge to publish that data, right?
Yeah, they'll have their own Benchmark will have its own benchmarks, right?
Okay. Yep.
And these companies that that I mentioned, Albemarle or Livent or SQM, could utilize those contract pricing, or excuse me, they could utilize those prices when they enter into negotiations with their offtake partners. And so, again, benchmark could be used as a benchmark. And so, again, when I look at SQM's earnings calls or Albemarle's earnings calls, so you're never going to get the number, right? You're never going to, you can get sort of maybe a blended average or a range or an idea of, the price that they're getting. And again, these are very, very robust, regardless today, very, very robust, regardless of what's happening in the spot market. So, it is, you just sort of have to keep a very close eye on the market, I would say, and just get a feel for their trajectory of pricing. But, again, at the end of the day, I haven't seen any let up in lithium demand in and of itself. And that is, of course, one of the main factors here that ultimately does filter into pricing.
Awesome. Well, that's where I want to dive into next, right? We're gonna talk about this looming supply crunch that everyone's talking about. It seems so simple, right?
Mm-hmm.
It's like staring at us right in the face. There is not enough supply right now. There's not enough supply coming online or in the foreseeable future. Like, am I missing anything here? Like, where do we go wrong? Where do we fail in this thesis?
Well, I think, first of all, lithium, like I said, back in 2010, nobody cared, right? I mean, lithium was a nice byproduct of brine production out of Chile, in particular, for other products. This, I guess, what I'm trying to say. And so now, again, it's a much different ball game. Lithium has become very strategic, from government level to company level to country level, right? And so, what did we miss? I think a lot of stakeholders along the supply chain are just waking up to how long it takes to bring new supply on stream. I mean, I think in general, you can put, your supply demand forecast together, and you can have kind of a linear demand trajectory, for lack of a better phrase. My own personal view, just for the sake of numbers and data here, is that I think over this decade, the decade of the 2020s, lithium demand grows at 20% per year. Put another way, that means we're going to need about 140,000 tons of new lithium supply every single year. Most new lithium mines, irrespective of hard rock or brine or clay or what have you, I don't know, they're 30,000 ton producers. Before people, watching this send hate mail with their hair on fire, yes, the mines are some are bigger, and they're going to have to get bigger, and that's the challenge for the lithium mining industry. And so, the structural deficit, to your point, I would argue, is staring us in the face. I would offer maybe one word of caution. Deficits ultimately have a way of fixing themselves,
Rebalancing.
right? And
of course.
rebalancing. And so when I put an initial, I remember in 2020, right around the time of the Tesla, battery day, might have been November, I think, 2020, can't remember. Nevertheless, I put a model together and I said, okay, let's take a look at where we are today: supply, demand, existing producers, expansion capacity, near-term producers, and kind of handicap if and when they get into production. And I came out with, by 2030, lithium being in a 1 million ton per year deficit, which I thought I did something wrong, and there's an error in Excel or something like that.
This doesn't
crazy.
make sense.
It's crazy. It doesn't make any sense. And the word of caution is the following: I continue to update that model. Used to be every year, every 6 months. Now it's like every quarter. And that deficit today is down to around 700,000 tons. Okay. And so I would be, I'm not going to say willing to bet, but that deficit is going to narrow further, arguably, right? I mean, that's at the heart of the debate. You'll probably have people on your show here that will say something completely different, but deficits do have a way of working themselves out. And this is in no way am I being bearish on lithium. I'm still very bullish throughout the course of the decade. I'm simply saying that supply will ultimately come on stream, whether or not it's 140,000 tons a year or not. And so, the money gets made, so to speak, in between kind of now and 2030 as producers come on, some exceed expectations and some don't, and that creates the opportunity in the markets.
I think most don't exceed expectations.
No, I'm being very, very polite. To be fair, we have seen a couple of companies come on recently that have met expectations, which is quite frankly rare for the lithium.
Let's bring that to the cards. Sigma Lithium, right?
Sure,
like absolutely. This is one of and they are a client, full disclosure. I've been working with them for a year and a half. It's so rare you see a company deliver in this manner, right?
Yeah, and
it's exciting to see, and it's also great for investors. Like, when was the last time you saw a stock listed on the TSX Venture Exchange give returns like that as well? It's incredible.
Yeah, it's terrific. I mean, it's an incredibly hardworking management team. I mean, they've sort of stuck to their guns. They've brought in great technical talent as well to build the infrastructure there. So, it's not a huge surprise, quite frankly, to see the success there and see the shipments. And so, it'll be interesting to see. I think they're close to making some sort of a determination or an announcement on expanding their existing capacity, given, the quality of their concentrate and given just the markets in general. I don't see why they wouldn't expand it. So, Brazil,
makes a lot of sense.
Yeah, absolutely. And Brazil is just another very interesting, I think, it's going to occupy a very interesting kind of seat at the lithium table over the course of this decade. It'll be interesting to see how other hard rock players, in addition to Sigma, kind of try to join the fray.
So who are some of the other guys that have kind of come online in the last 6 months to the last year?
Sure. I mean, look, obviously another potentially big one is Lithium Americas with their brine project in Argentina. I think they're on pace for, I don't know, maybe 5,000 tons of production carbonate by the end of 2023, which is totally fine. I don't think that's good or bad or whatever. I think that what they're probably doing is managing expectations in terms of bringing material to market. And so that will ultimately be at least a 40,000 ton producer per year of carbonate.
As they continue to expand.
They continue to ramp up. And look, this is, of course, one of the great differences, right, between hard rock and brine. I mean, when I think about lithium brine operations, it's really, in my view, it's not a mine in the traditional sense. Again, people will argue that, but my view is lithium brine mining, if you will, or operating, is really a very complex chemical operation, chemical
plant.
Or
a science experiment.
It
to
is.
some degree. Once you got it, you got it.
It is. And the difference is, I remember I was talking once to somebody at SQM, and he said to me, brine is alive. And that's obviously very different from hard rock, where, I don't know, 100 million years ago, like the geology was basically set. And it doesn't mean that it can't change. You don't have to alter your flow sheets, but that is one of the challenges with respect to bringing brines on stream and ramping them up. I mean, Albemarle had talked about a 2-year ramp up phase for some of the new conversion capacity that they are bringing on stream. Not sure whether or not that's hard rock or brine, but nevertheless, kind of comes back to the original question that we were chatting about, right? Which is, okay, how does supply and demand match? And they're not going to in the near term, because even major players like Albemarle are saying, yeah, it's a 2-year ramp for conversion capacity. So anyways, I got a little bit off track there.
No. That's awesome.
Yeah. I mean, Lithium Americas is probably the other most notable near-term producer, or entrant, if you will. Core Lithium in Australia, I think they've had some sort of ramp-up challenges, but they are new to the space as well. And of course, you've got existing players ramping capacity pretty aggressively in Western Australia as well. So again, you can have any list, a very long list of potential near-term suppliers, but once you sort of get funded and financed, that's when I think the technology and the execution risk really comes to the fore.
And do you see more of the supply coming on the near term from these expansion plans of these existing producers? Because they all have expansion plans, right?
Sure.
As far as I can recall, correct me if I'm wrong.
Yeah.
Because I just see this whole process of permitting and financing and tough markets and bad equity markets just continue to delay these projects time and time again. And I just got such a kick out of some of these early analyst reports that talked about this future production that was coming online on these certain timelines. And like, yeah, when have you ever seen these mines come online? Like, I don't care where you look at. There's been so few projects come online on time, on budget, on schedule, in any commodity. I just don't have, like, analysts can actually look at that and go, yeah, that's real.
Yeah, look, right? And it's challenging. And again, I think one of the reasons why lithium to date has been underinvested in is because it's a small market, opaque pricing. And look, it used to grow at 6% per year, which is still very healthy, right? Double global GDP rates. But now that it's kind of exploding, it's forced everyone to come to the table. And even existing players, I think your original question was, will the existing players have an easier time expanding capacity? Sure. Again, that's a broad generalization, simply because they're already in production and they can anticipate problems, I think, a little bit better than companies that are going from, pilot plant to larger pilot plant all the way into commercial production. I mean, I would argue that for any new player, any near-term producer, if they give you a date of, I don't know, I'll just make up, December of 2023. If they tell you we will be in production in December of 2023, to me, that's like the ribbon cutting. Okay. Right. They won't be in scaled run rate capacity level production for 12 months. And again, no disrespect. I'm simply trying to elucidate how difficult
it's engineering.
Yeah, it's engineering. And again, brines are arguably more complex than hard rock. Again, people are going to watch this and I'm sure the hate mail will flood in, but that's the key. And honestly, that's why I think hard rock lithium mining is probably going to become a much larger kind of piece of the pie, if you will, percentage of the pie relative to brine. It's quite frankly a lot more straightforward. It is traditional mining. It's mining and concentrating. And you can also have, I think, some optionality in terms of the end product you're looking to produce, either carbonate or hydroxide, at a roughly similar cost, right? And that's just not the case with brines. So lots of technical challenges, I think, face this industry in the coming years, regardless of whether or not you've been producing lithium for years or decades, or you're a newbie.
Wow, that's super interesting. So how far, like, I think I read somewhere that China owns about 80% of the world production or something like that. Like, how far is the US behind? And like, how screwed are we? Well, I'm Canadian, I shouldn't say we. But
it's going to it depends what the goal is. Okay, is the goal a completely self-sufficient regionalized supply chain that does not touch China? It's going to take, supposing that's even a good idea, right? It's going to take at least a decade for that. Okay, And that speaks to a number of issues. Number one, how, to your point, how entrenched China is in the lithium-ion battery supply chain. Just with respect to percentages, if we just talk lithium for a second, China is responsible for, I don't know, 13 to 15% of lithium mining capacity, over 60% of lithium refining capacity, which is, in my view, that's where the real bottleneck is.
That's the bottleneck, yeah.
From a US and from a North American perspective. And then as you go further down the supply chain, cathode, anode, battery, cell production, and recycling, I mean, the percentages, the ownership of China in those aspects of the supply chain is 60, 70, 80%, 100% in the case of anode, right? So it's going to take a long time. And I think, you know, I'm sitting here in Washington, D.C., where I now live, and obviously the Inflation Reduction Act is designed to
support that,
support it and counteract China's dominance, support the build out. But yeah, you can have all the capital in the world. And I like to jokingly say that, you know, now we have automotive manufacturers here in North America literally stuffing money in a bazooka and just blasting it at the supply chain, hoping that it will in some ways make things happen faster. And without we're a little bit off topic here, but without, you know, some more sort of focused, I think, streamlining around mining permitting in particular, it's going to be a number of years before we have some sort of a self-sufficient supply chain. I think China is always going to play a role in the lithium-ion battery supply chain, whether we like it or not. And I'll just say one example and then stop. You know, it's been very high profile, but Ford has an agreement in place with CATL, the largest lithium-ion battery manufacturer in the world, to build a battery manufacturing plant in Michigan, I believe. Yep. And of course, this has ignited a firestorm of controversy here in Washington, D.C., in the House of Representatives in particular, about what the relationship looks like, who owns the IP, how many jobs are going to be created, so on and so forth. And so you have the U.S. government looking at these China relationships and China's investment in the supply chain one way, which is, we don't want it, we're going to wall them off. And then you've got corporate America in this instance saying, well, wait a minute, you know, we can build out a supply chain more quickly if we leverage Chinese technology on the battery side. And so I don't know how that tension is going to resolve itself, but that kind of uncertainty around how governments, how the U.S. government views China versus how corporate America views China is a sticking point, I think, to really building out supply chains successfully.
Yeah. What I think is going to be really interesting is to look back in 15 years and say, who did it right? Like, this is just such a new and massive and big initiative.
Yeah,
right?
With trillions
and trillions of dollars, you know, all sorts of hand-me-downs, and it's going to get quite interesting to see how this all rolls out. But I'm very interested to see who's going to get it right in the end, and we won't know for quite a long time.
We don't know, and there are a number of reasons for that. And I think one of the other interesting areas, you know, that could help determine that question, an answer to that question, an area that I focus on is battery technology. Again, if we were having this conversation during Tesla's Battery Day in 2020, I think the narrative was, okay, in Western markets, we want cars that have 500 kilometers of range, fast charging, et cetera, et cetera. And so what that means is energy dense batteries, NMC or NCA chemistries, LFP, you know, that's a China story. It's just not worth it. That narrative has completely changed because of, in my view, because of advances in not so much specific battery chemistry with respect to LFP, but battery chemistry or battery architecture, I should say. And so companies like CATL, BYD are producing LFP batteries for automotive that can, in some cases, rival NMC technology. And so it's early days, but my point is the idea that, you know, 80% of kind of the pie chart, if you will, for cathode capacity was going to be nickel heavy here in the West by 2030, probably going to be closer to like 50%, which is, again, doesn't really do anything for lithium, positively or negatively. It's because it's going to be lithium based, but does have implications potentially for some other metals as well. And also, you know, the chemistries that these battery manufacturers are going to be producing in the coming years.
That actually leads right to my next question, which is like, do we have the same bull case for all these battery metals as lithium? Is lithium a special situation like copper, cobalt, nickel, you name it? Looks like there's a lack of supply in the market. There looks like there's a looming supply crunch across all those metals. But do you see discrepancy, or is lithium a special case?
Yeah, I think you have to, or, what I do is I literally break out each one of the battery metals, and you have to have your own kind of informed view on supply and demand and pricing of each. Again, lithium, I think Volkswagen called lithium the indispensable or some metal or something like that. And, my view is that nothing is going to displace lithium ion out of mobility. Okay, so trucks, buses, scooters for the next 10 to 15 years. Okay, you have a 30-year track record of use and quote unquote safety, or how to make them safe. And then, of course, it's the lightest of all metals and holds a charge, which is basic stuff. And other chemistries can't really make that claim. So lithium ion is the winner. That said, as I mentioned before, you've sort of seen this sea change in the last couple of years towards LFP, and not away from NMC, but the focus is a little bit more on how do we get, these other chemistries like LFP into commercial production more quickly. And so, you look at nickel, and it's an interesting case, right? Because the majority, in my view, the overwhelming majority of nickel that is going to come to the market and go into the battery business is going to come from Indonesia, to the tune of a pretty aggressive, I think, amount of supply in the next 4 or 5 years. It doesn't mean that we shouldn't be focusing on domestic resources, obviously, but, Indonesian nickel is problematic, I guess, in some instances, because, of course, if you are an automotive manufacturer and you're sourcing your raw materials and you go to Indonesia, say, for example, you're Ford or your General Motors, the United States does not have a free trade agreement in place with Indonesia. So therefore, technically speaking, the material that would be mined in Indonesia would not be eligible for some of the EV tax credits.
Interesting.
Or would it, right? Because
Yeah.
Indonesia, you could make an argument, is an ally of the United States, certainly not a foreign entity of concern. But how to, given the fact that, we're coming into an election year here in the United States in 2024, how do you streamline some of that, some of those unanswered questions around, well, what about our allies that have the raw materials that we don't have a free trade agreement in place with? Who makes that decision, right? And so that's one issue with nickel in particular, where again, like I said before earlier, my initial question when I got into this business was, where is all of this material going to come from? Nickel's not rare. I mean, you could have an interesting conversation about seabed mining, right? I mean, maybe that, I think initially it was never a terrible idea, but it was certainly an idea that people said, no, we don't want to do that. Let's look elsewhere first. And now we're realizing, hey, wow, it's going to be really problematic to source nickel from Indonesia, because, it's the other side of the world. So there are transportation costs and CO2 emissions issues. And also the fact that a lot of the nickel that is mined there and is processed is done so by Chinese entities. So again, I'm just raising one question about one metal that you have to have an answer to have an informed view on supply and demand. Is nickel mined in Indonesia, processed by a Chinese player, eligible for tax credits here in the United States?
Right. I don't know the answer to that.
No, I don't think anybody does. No, it's a rhetorical question.
To be a fly in the wall in that boardroom, though. Hey.
Well, look, I think
amazing.
Here's a perfect example. Yeah, it would be amazing. I think if you ask, like here in DC, if you ask Senator Manchin, kind of one of the architects, the IRA, or the architect, depending upon who you speak to, you ask him that question that I just posed, Indonesian sourced nickel processed by Chinese players ends up in the United States. Is that eligible for tax credits? He would say absolutely not. But he's not the one determining that, right? The Department of Treasury and the IRS is still trying to figure out what a foreign entity of concern is from a legal perspective. So there's a lot of limbo here right now in terms of sourcing your raw materials. And, Arlen, to your point just now, I mean, again, to use Ford as an example, they're just barreling ahead. I think they're looking at this and saying, okay, EVs, this is happening. It's not, terribly uneconomic for us as a business right now, but they're aiming to change that. But of course, it all starts with access to the raw materials. And so Ford has partnered with Vale in Indonesia, I believe, and Huaya Cobalt to spend about $4.5 billion, I think, between the three of them to bring Indonesian sourced nickel into their supply chain. So irrespective of what the final ruling is, for an entity of concern, eligible, ineligible, Ford's basically saying, look, we want to have a lock on the supply, and so this is what we're willing to do.
Wow. One thing I really appreciate about this conversation is how little I know and how informed you are, and just really how deep this conversation could go. Right? It could just go on for hours and hours and hours. And wow, that's really good stuff. Okay, I'm certainly going to bring you back on for a discussion about nickel or graphite at some time down the road. But I kind of want to get into some fun stuff on how does the market play some of these lithium names? Do you see the value in near-term producers, existing producers, explorers? Like, where do you see we are in the cycle right now? Where's the value?
Yeah, I think well, first of all, this is a cycle. Okay. I don't care about structural deficits or permanently higher prices. I mean, I guess I do because that's important to the narrative, but this is the third lithium cycle, if you will, of my career. And, they're the only thing they all have in common, right, is that they have a beginning and an end, and you don't know which, each one is. I think that, look, from a junior mining perspective, the trajectory of the lithium price really determines, I would argue, the returns on the juniors. Okay. Juniors, of course, have catalysts with respect to drilling or permitting or even offtakes at this point in time. Mm-hmm. And, I'm not sure if the early stage juniors today have as much momentum behind them simply because of the trajectory of, we mentioned before, the spot price. And even though there are very healthy contract pricing dynamics there, I think that, you're likely to see a lot more M&A in lithium. The bigger guys getting bigger. I mean, obviously, it looks like Liontown is now going to go into the willing arms of Albemarle, although I did see an article this morning about a potential blocking stake by an unannounced bidder.
And actually, I want to bring this up very, very quickly. They said this is the final offer.
Yeah.
Do they walk away if it's not accepted? And who do they go after next?
Well, I think that speaking of being in the boardroom, this would be an interesting conversation. I mean, look, that's a very large deposit, Liontown's Kathleen Valley, in a great geopolitical jurisdiction. It's had a lot of work done on it, so I think it's very de-risked from a geologic perspective. I would be surprised if Albemarle came back. I don't honestly know, Arlen. I mean, I think you sort of say this is our final offer. It's like, okay, well, if Liontown goes to somebody else for 50 cents more a share or something like that, does Albemarle sort of eat their words and pay up? I don't know. I mean, there are other possibilities out there. It really depends on I guess Albemarle's view on sort of geopolitical risk and where they want to be, right? I mean, they obviously have invested in Patriot battery metals as well up in Canada. Haven't seen much from the majors in Africa, at least not yet. But remains
not particularly want to be a shareholder of any African names right now. Seems to
you got to have an iron. You got to have an iron sort of cast stomach. I mean, look at Goulamina and Mali, and there's just question marks. Yeah. No one disputes the demand, but how these governments, and I don't mean to pick on governments in on the continent of Africa, how governments think through royalties and tax rates and welcoming in foreign direct investment while, getting their quote unquote fair share while welcoming in foreign direct investment. Again, this is another kind of push and pull. There's no 3-ring binder. There's no playbook you can pull off the shelf and say, this is how you create a natural resource policy that works for everybody. Every country is a little bit different. I mean, Chile was talking about rewriting its constitution and then rethinking, their whole lithium positioning, if you will. Playbook, and they still are, right? In their playbook. And so, and that's, it remains to be seen whether or not that was a good idea. Maybe it benefits Argentina in the near term. I mean, certainly seems like it has in the court of public opinion, but in 4, 5, 10 years from now, it could be a different story. So,
yeah, we've seen like threats on nationalization or some sort of factor of that in Mexico, Argentina, Chile, and even China.
Yeah.
Right. Like where's the next shoe to drop?
Well, look, it's a function of demand and a function of price, right? And when lithium was at $6,500 a ton, no one was talking about resource nationalism,
of course not,
or resource nationalization, but now that we're permanently higher, I mean, let's say lithium kind of settles longer term at a floor of 20,000 US a ton. I mean, I think just about every asset outside of some of the hard rock material in China can operate and operate at varying degrees of profitability at 20,000 US dollars a ton, right? And so governments have realized this and have realized, okay, there's this shift happening around decarbonization, and no country wants to just produce the raw materials, right, and export them. I mean, this is why Indonesia has banned raw nickel exports, right? And other countries will follow suit. Some countries choose to increase royalties or taxes. Some countries want more of the supply chain in country and in-house. And so that is another battle that's going to be fought over the course of, the coming decade plus, because it's going to take time to sort of figure out, again, what the optimal natural resource strategy is for a country, and then implement it and build out the capacity.
Awesome. So let's say I'm a brand new investor. I've been listening to this podcast. I'm so wowed by all the information that you've given me that I want to start investing in this space. What names do I bring up to my investment advisor just to kind of get a general leverage to the space?
Yeah, look, I mean, I think there are a couple of ways to do that. First of all, before naming names, I think what you want to do, the most important thing, if you're going through, the PowerPoints and thinking about that, is which management teams have done this before? Okay, which management teams have built lithium projects and lithium plants? Because there aren't that many. Okay, that number is certainly growing, and as we kind of go down the road here over the course of this decade, you're going to see management teams that will do it successfully, both on the hard rock side and on the brine side, and even here in the United States, perhaps on the clay side as well. So first issue is, number one, which management teams have done this before? Okay, and so those would be at the top of the list, if for no other reason that they can anticipate some of the challenges and some of the problems. Second thing I would be looking at is geopolitical kind of jurisdictional risk. I mean, as I said before, Africa is it's not that it's a bad place to be. I mean, I think there are certainly world-class assets and size and scale that you would want to look at there, but you have to be willing to deal with a lot of the uncertainty. Okay. And so that's why places like Canada, places like Australia are, I think, particularly well suited from a lithium supply perspective in the next decade or so. Okay. Now, in terms of specific names, then it gets a little bit tricky. I mean, based on what
I'm holding you to this, man.
Yeah, look, well, based on what I have just mentioned to you, I mean, management teams that have done it before in reasonable geopolitical jurisdictions. I mean, Lithium Americas, and full disclosure, I'm a shareholder. You could argue whether or not Argentina is a reliable geopolitical jurisdiction, but nevertheless, there's an enormous amount of capital flooding into the space. Lithium Americas, which is in the process of actually splitting itself.
Did that split yet?
No, I don't believe yet. I don't believe that
it got approved.
Done.
It got approved, but it didn't.
It's approved,
split
and now the lawyers are doing what lawyers do, and
getting
all that
paid.
Kind of stuff.
That's what they're doing.
Yeah. It's somebody's got to put the paperwork together. Yeah. But look, this is a company that, in my view, but even before this split up, had what I would call the appropriate blend of geopolitical and geologic diversification. Okay, you had Nevada, you had Argentina, you had clay, you had brine. So there's a lot of optionality there. And so, there are a number of lithium players out there that are, quite frankly, one-trick ponies. and that's no fault of their own. It's just the business model. They have one hard rock asset, and this is what they're focused on. So, Lithium Americas is one that's very interesting. In terms of other kind of near-term players, you mentioned Sigma beforehand. I mean, how they sort of ramp up and enter into potentially future offtake agreements, or just continue to, produce high quality material. I mean, lithium pricing, spodumene pricing specifically, can fall dramatically. And Sigma can operate profitably because of the quality of that asset. And as they increase their scale, that should help them even more. So, the stock has been on an incredible run over the last couple of years, but that's one that I would also have on the radar.
Are there ETFs and things like that, which makes it super simple for these guys?
Absolutely.
And they don't have to look up the management teams. And because I just find that these new investors come in these things, and you can say, look at the management team, but they don't know how.
Yeah.
They don't even know how to get a hold of them, right? Or even start with, how do I do the due diligence to find out if these guys have done this before?
Yeah.
Right.
Well,
it's a steep learning curve, right? When you're coming into anything new like this.
It sure is. The one ETF that comes to mind is the ticker's LIT. I don't know if that's Global X or not. I honestly don't remember, but and I'm actually long that one as well, now that I think about it. So that's the ticker. And, again, it just offers you, to your point, if somebody's new, they're listening to this and they're saying, well, gosh, how do I even put a toe in the water? That would be a place to start.
Yeah. LIT is the symbol. That's what I was looking at. And then I think there's another one. I think it's BAT, BATT.
Yeah, I'm not familiar. I'm not as familiar with that one. But look, the ETFs, you'll get battery production exposure, you'll get lithium production exposure, you'll get everything along the supply chain. It just may not allow you to take as sort of concentrated a bet as you would if you were to invest in one of the specific companies.
Yeah, that's awesome. Chris, I really enjoyed this conversation. I can't wait to have you back on. I had like 50 other questions I wanted to rattle at you, but I just want to be cognizant of your time. Everyone, thank you so much for joining into another episode of Kinvestor Report. We'll leave some information about Chris on our description below. If you liked what you heard today, like, subscribe, share with your friends, add your comments, ask your questions. We're here. Super exciting space to be in. Chris, again, honored. Thank you.
Oh, thank you. I appreciate the opportunity. Looking forward to round 2.